$20 billion in new liquidity, new firepower is coming to Ethereum. And one company just massively increased its capacity to keep buying ETH. It's crazy. And it's part of a larger wave hitting the market now. We're seeing record-breaking moves in Bitcoin, new CPI numbers that could shape the Fed's next decision, and unprecedented deals between some of the biggest tech companies in the world and the US government. By the end of today's show, you'll see exactly how all these moves connect and what to expect in the upcoming weeks. So let's get started by taking a look at some key macro updates first, because we know they inform the crypto market. So much to get into this morning. First off, the July inflation numbers came out, and what we saw was that overall inflation, the metric that includes everything people buy, was 2.7%. That's a little lower than the 2.8% economists were projecting, which means prices in general aren't rising as fast as it was feared. But when we look at core inflation, which is the inflation metric that leaves out food and energy, mainly because these vary so much, it came in at 3.1%. That's higher than the 3% forecasted, and the highest we've seen since February this year. Prices in that category are still rising faster than the Fed wants. The month-to-month number came in exactly as expected. And what's important to note here is that even with the higher core inflation data coming in, markets are acting like a September rate cut is almost guaranteed. The CME FedWatch tool shows there's now more than a 92% chance that the Fed will lower interest rates by 0.25% next month. Political and economic pressure. We know President Trump has been pushing for lower rates, and the expectation is that Jerome Powell will point to signs of a weaker job market to justify the move, even with inflation not fully under control. So stay tuned to find out what happens, because we'll be following it here very closely. Next, on the trade forefront of things, Trump made a significant move just hours before a major deadline. He signed an executive order extending the US-China tariff pause by 90 days, which is fantastic news because without this extension, US tariffs on Chinese goods would have jumped to 145%, and China's tariffs on US goods could have hit 125%. So now both sides will be keeping tariffs where they are, around 30% for US imports from China and 10% for Chinese imports from the US, which gives both parties and both nations more time to negotiate behind the scenes, behind closed doors, and in turn, we avoid an immediate jump in prices for consumers, which is very, very good. And insofar as technology goes, as I was alluding to in my intro, NVIDIA and AMD just agreed to something unprecedented, giving 15% of their revenue from chip sales in China directly to the US government in exchange for permission to sell there. So now you see the beauty of negotiation and what President Trump is really good at. For NVIDIA's H20 AI chips and AMD's M1 308s, that's billions of dollars. Analysts estimate NVIDIA alone could make about $23 billion from these sales in 2025, from this year. This deal was announced just after NVIDIA's CEO Jensen Huang met with Trump at the White House. So we see the administration's pattern of opening market access in exchange for clear financial benefits to the US. And now, may I get a drum roll? Intel might be next. Trump met with Intel's CEO Lip-Bu Tan just a week after calling for his resignation. Just crazy. And described the meeting as very interesting, which is exactly the words Trump would pick, adding that Tan will be back next week with suggestions. This could set up a similar type of arrangement for Intel, especially with its $28 billion Ohio chip factory projects in the works. Putting it all together, and you get a clear picture, or at least I hope you do, one where inflation is still higher than the Fed wants. But the market over here is convinced rates are coming down next month. And in many ways, it's market sentiment that does move the market. So this is good. We also see the White House is driving trade and tech deals that keep inflation from spiking. He's paying attention to the stock market. We also see a White House that's protecting the US industries and continues to deliver economic wins at home. The most strategic companies in the world are now negotiating directly with the presidency. And for the markets, this is exactly what we want to see. These are the market conditions that are ideal. Liquidity expectations are rising. We have an optimistic market, as I said. Sudden shocks are being avoided with the whole China-US tariffs being postponed. And the risk of a trade war flare-up has been pushed back through it, which is perfect. So unless next month's inflation numbers take a sharp turn up or talks with China collapse, the momentum right now is in favor of a risk on assets market. That, of course, includes Bitcoin. That said, let's zoom in on Bitcoin, Bitcoin's market, and what's going on all over the world as it is right now regarding Bitcoin accumulation strategies. This past week in Bitcoin was nothing short of historic. According to this breakdown, 18 publicly traded companies increased their Bitcoin holdings, making this the busiest week for corporate Bitcoin accumulation this whole year. And one of the key headlines we saw come in was from a company called Satsuma Technology, a UK-based fintech and alternative lending firm listed on the London Stock Exchange. Their purchase of 1,097 Bitcoin, worth around 131 million, instantly ranked them among the top 50 Bitcoin holders worldwide. This is one of the first times a major UK financial service group has made a 9-figure Bitcoin treasury allocation. This is wild. Moves like this raise competitive pressure across the whole industry, which means it basically creates FOMO across the international markets as momentum continues to build, because no one wants to be left behind, the last one to act. This ripple effect isn't confined to the UK either. Across the globe, new contenders are stepping up with equally bold moves. We saw Metaplanet, listed on the Tokyo Stock Exchange, added 518 Bitcoin to its reserves this week, bringing now its total stack to 18,113 Bitcoin. Moves like this show that Bitcoin treasury strategies are spreading beyond the US and the UK, with major players in Asia stepping up their allocation. And across the globe, across all the oceans, the Norwegian government pension fund, the largest in the world, boosted its own Bitcoin exposure by 192,000 in Q2, now indirectly holding 7,161 Bitcoin. Meanwhile, David Bailey, CEO of Nakamoto, went public with a bold commitment. He's purchasing $1 billion worth of Bitcoin today. That's the kind of conviction that doesn't just signal confidence. It shouts, you better hop on this Bitcoin accumulation bandwagon or you are gonna get left behind. And that's exactly my message to you. I had one of you comment that, oh, we're always saying, it's starting, the bull run's starting. Well, it is, okay? Sometimes moments in time are spread out, but this is the moment. And if you snooze on this or you think, oh, it's never gonna come, well then, I feel bad for you. And hopefully that's not you. And in the US, Jack Dorsey's $50 billion Block Inc. is about to roll out a full stack Bitcoin banking suite designed to help small businesses integrate Bitcoin treasuries. So this very well could accelerate Bitcoin adoption at the grassroots level, bringing Bitcoin from corporate boardrooms to local business balance sheets. The miners are also sending a very clear message right now. We see industry giants Mara, Riot, CleanSpark, and Hut 8 are holding on to more of their mined Bitcoin instead of selling it into the market. These companies live and die by their Bitcoin price. And when they reduce supply, it's often because they see a stronger leg up ahead. Zooming out, macro flows are also working in Bitcoin's favor. As highlighted by Crypto Quant, year-to-date performance shows gold up 32.47%, silver up 31.77%, and Bitcoin up 23.34%, while USD is down 9.53%. A reminder that when the dollar weakens, hard assets tend to surge. Adding to this setup, Bitcoin volatility is hovering near its August 2023 all-time lows. Historically, periods of ultra-low volatility often precede explosive moves. And with Bitcoin dominance easing, the stage could be set for a breakout run. Now shifting the spotlight over to Ethereum. Institutional appetite here is outpacing that of Bitcoin and by a wide margin. In the past 24 hours, ETH spot ETFs have attracted $1 billion in net inflows, while Bitcoin brought in $178 million, roughly 5 times less than what flowed into Ethereum. So we see in many ways that now that ETFs are legalized, we are seeing early signs of the altcoin season expressed through the ETF action. And a large part of this demand is coming in from Tom Lee's BitMine, which now has grown its ETF holdings past 1 million Ethereum, up from its 833,000 Ethereum last Monday, an increase worth of about $2 billion in just 1 week. And their long-term goal is 5 million, roughly 21 billion at today's prices. They've just taken a huge next step towards that target too. BitMine has filed to expand its at-the-market equity program by $20 billion, a 5-fold increase in issuance capacity, bringing their total to $24.8 billion. Their new funding firepower gives them the means to keep scaling their ETH purchases aggressively. The buying is not limited to one buyer either. SharpLink Gaming announced a $900 million ETH acquisition yesterday, bringing its reserves to 598,800 ETH, close to 0.5% of the entire supply. And on-chain data shows that balances on ETH accumulation addresses have surged to record highs, meaning large investors are steadily adding to their holdings, while at the same time, retail traders are selling into this strength. Poor things. Creating an environment where the biggest players are buying, with small traders are letting go of because they just don't know any better. This steady accumulation on the spot side is only part of the story. In the lending markets, activity is accelerating just as quickly. Aave, for instance, has seen ETH borrows surge past $20 billion in total outstanding loans for the first time ever, signaling significant leverage building inside DeFi. This can amplify upside moves, creating sharper price swings and boost Ethereum's network revenue, which then in turn strengthens the long-term case for holding ETH. The derivatives market is also showing strong positioning. ETH options open interest, the total value of open contracts traders have placed on future ETH price moves, has climbed to $13.75 billion, the highest in more than 17 months. High open interest often signals that traders are gearing up for large price moves. And in this case, sentiment is leaning bullish. From ETFs and corporate treasuries to on-chain accumulation and derivative positioning, all signs point towards a powerful wave of institutional demand building behind Ethereum. So while Bitcoin and Ethereum may dominate the headlines right now, they aren't the only assets attracting corporate treasury accumulation. Companies are increasingly steering into other tokens, and the scale of these moves are starting to rival those of major cryptocurrencies, which signals the beginning of the parabolic phase of the altcoin season. And one of the boldest plays comes from Alt5 Sigma, which is raising $1.5 billion to build a treasury in World Liberty Financial, targeting approximately 7.5% of the total supply. The company is executing this via a direct offering and private placement. And the arrangement also brings Eric Trump onto the board. And in a separate surprising turn of events, Safety Shot Inc., a NASDAQ-listed health beverage company, has shifted its strategy. They've chosen Bonk, a Solana-based meme coin, over the big-name cryptos. So you see the degen angle coming through on the institutional level. The company has already secured $25 million worth of Bonk from founding contributors and aims to ramp that up to $115 million by the year's end, which would represent about 4 to 5% of Bonk's total circulating supply. And another significant move comes in from CEA Industries, a NASDAQ-listed firm that formed a new subsidiary called BNB Network Company and purchased 200,000 BNB in a $160 million deal. This instantly makes them the largest corporate holder of BNB. This purchase is part of a broader $500 million private placement, and they've secured warrants that could raise their total exposure to 1.25 billion. However, not everyone in the space is cheering these big treasury moves, as should have been expected. We see Kadan Stableman, I hope I'm saying his name right, CTO of Komodo platform, says the trend could be co-opting crypto for corporate interest. In his view, it might be great for prices in the short term, but it also risks pulling the industry further away from its original decentralized vision. Because as institutions widen their reach into altcoins, attention is also turning towards the infrastructure that powers these markets. And in DeFi, no platform has been more influential than Uniswap, and the community is now weighing in one of its most significant proposals yet. Uniswap, the largest decentralized exchange in crypto, is about to take a major step in how it operates and rewards its community. After nearly 6 years of growth, the project is preparing to share more of its success with its token holders, which I love. The plan is to set up a new legal structure under Wyoming's DUNA framework, the Decentralized Unincorporated Nonprofit Association. And this setup would let the DAO, a decentralized autonomous organization, which is essentially a community-run group where token holders vote on key decisions, operate more like a traditional business while still keeping governance in the hands of the community. It would be able to sign contracts, hire service providers, and handle tax obligations without losing its decentralized model. And part of this proposal allocates $16.5 million worth of Uni to cover back taxes and establish a legal defense fund. This comes on the heels of a major regulatory win, as the SEC officially ended its multi-year investigation into Uniswap Labs earlier this year without taking action. The most significant change in this framework would enable the long-discussed protocol fees switch. Under this model, a portion of trading fees that currently go exclusively to liquidity providers would begin flowing into the DAO's treasury. This would give the community a sustainable revenue stream to deploy however members decide. If the proposal passes, Uniswap would become the largest DAO to adopt the DUNA structure, setting a precedence other DeFi projects will be watching closely and then can follow. So when you zoom out, you have to see how it's all connected. We've got macro wins building, from inflation numbers pushing the Fed towards a rate cut to trade deals that keep the economy steady. And amidst all of this, Bitcoin is seeing record corporate accumulation. Ethereum is pulling in historic ETF flows, and even altcoins and DeFi projects are getting serious institutional attention. And at this moment, all the big levers in the market are moving together. The Fed, the corporate buyers, and the market infrastructure itself, which is what it's all about, actually. It often leads to a big move when all of these factors collide. So the question is, who will be ready and who will be scrambling to catch up once the move starts? And for those feeling bullish on Ethereum and curious about which other top plays could be next, watch the video linked here. And thank you so much for watching. I love you guys all so much. I've loved hearing your comments. And if I haven't responded to you, I will be, okay? That's a wrap for today's video, and I will catch you guys in my video tomorrow.